Ready to go? All right. Welcome to the webinar, How to Adapt Your Business to Current Times, presented by Business Advisory Professionals. My name is Adam Flagg, and I'm a member of the Business Advisory Professionals and run an insurance and wealth management agency that specializes in healthcare benefits, commercial insurance, and money management, including 401k plans. It's no surprise that COVID-19 is creating challenges for us on many levels. How to conduct business is among them. We're being bombarded by information, much of it contradictory, on a daily basis. And if you're anything like me in my business, sometimes we can fall into that analysis paralysis area, and it makes it hard to even know where to start. One thing that's certain, though, is that the consequence of inaction can be catastrophic for your business. On the other hand, great disruption like we see today create great opportunities for those that are willing to adapt. This expert panel will include industry professionals who will provide you with guidance and tips on what you should know about the changing business conditions due to COVID-19. This discussion will cover financial topics and delve into how you can reassess your business performance and develop new opportunities, allowing you to return to greater profitability. So let's talk about business advisory professionals, or as we sometimes call ourselves, BAP or BAP. We're a group of Central Texas business owners and C-suite advisors that have collaborated to provide your business with your own expert board of directors to help guide your growth, management, and profitability. We meet on a regular basis to solve business issues for other Central Texas businesses and do regular educational and networking meetings like this that are currently digital. We have three panelists presenting today. The first one to go will be Wayne Hegwood, who is a partner at B2B CFO. I'll have more on him in a bit. Michael Edwards is here. He's president of Precision Bookkeeping, an Austin-based firm. Michael's career spans over 30 years with leadership roles in operations and client services, primarily in the private sector. Most recently, he was UT's Housing and Food department as their Director of Business Services before starting his bookkeeping firm. We'll also have Lance Spracklin speak today. He's owner of Schooley Mitchell of Central Texas. Schooley Mitchell has the largest network of independent cost reduction consultants in North America. They represent over 22,000 businesses for their cost reduction needs. Prior to Schooley Mitchell, Lance has spent 16 years building continuous improvement programs for Fortune 500 companies as a Lean Six Sigma Master Black Belt. In 2017, he decided to leverage his talents for the small businesses who have created a greater need for his services. He's responsible for saving his clients over $25 million annually. I will mention that as we get started, on the right-hand side, you'll see a question and answer box, and you're welcome to type in those questions as the presentation is going. None of the speakers will be answering them in real time, but Lance at the end will help coordinate with the panel and get your questions answered with the presentation. So now I want to specifically introduce Wayne Hegwood. Again, he's partner with B2B CFO, the world's largest CFO services firm with about 200 partners nationally and more than 6,000 years of combined experience. Wayne is a financial executive with over 30 plus years of experience helping companies of all sizes. He's helped dozens of companies in the Austin area by helping owners think strategically and improve profitability. His presentation today is the 6 R's of financial wellness in the time of COVID. Wayne, take it away.
Adam, thank you for the warm introduction. Hope everybody's having a good day today. Good morning. Back in March when COVID broke, I read an article put together by McKinsey & Company, and it was the 5 R's of financial wellness written for small business owners. I decided to take that article and put it in a presentation format for small business owners just to try to help everyone during this pandemic. I started putting the presentation together, and I discovered there was a 6th R in the presentation, and actually it's the first R that we're going to discuss today. First thing that I think business owners need to do is to reassess their business. I want you to think about your business prior to COVID and what was going well. What was your business was providing a service or a product. You had customers that were coming and purchasing that. You had vendors who were helping you supply that. You had a group of stakeholders. And when you think about your business and what it was doing well, I want you, if you don't have a proper perspective, ask those stakeholders. I want you to go back to your customers. I want to go back to your vendors and ask them about the relationship. What was their perception about your company prior to COVID occurring? Then I want you to go back to the same stakeholders and think about what you could have improved upon. What were some areas? Hey, ask your employees, ask your customers for their assessment. Is there something that you could have been doing better? Now, COVID has changed many a business model. I don't care if you're in the restaurant business or a barber shop or any product or service. Chances are your industry or your business model has been changed by COVID. Customers cannot go into some business establishments. Businesses are having to pivot. Identify those model changes, and that is going to help you to start to develop some of these pivot thoughts. I always ask business owners 2 questions before I start working with them. I actually have 3 written here, but the first thing I want you to think about is why you started your business. There was an inflection point in your life where you decided that you could do it better, you could make it better, you could provide a better service. I want you to think about why you started your business. You're pouring your heart and soul into it, usually on a daily basis. I want you to think about that. And when you do that, you're going to reveal your passion. That is going to be those tasks and the areas within your business that energize you. You want to start identifying the parts of your business that energize you, the parts of your business that distract you. Individuals can be brought in to help you spend more time on your passion and grow your business and reduce stress and basically anxiety within your business. The last question I ask business owners is, where's the exit? We are all going to exit this planet. We're all going to exit our business. We need to think about what that looks like. Is it 3 years down the road? Is it 5 years down the road? Are you going to leave it to your kids? I want you to think about what it would look like, what it would feel like, supposing that you developed an exit strategy that you were going to exit your business in 10 years for $10 million. What would that do? What would that look like? What would that feel like? And the most important point on reassessing is writing it down. You need to take all of these ideas, all of the good assessment, the bad assessment, and you need to document your reassessment of your business. So this is prior to and thinking how COVID impacted you. I want you to resolve to address the immediate challenges that have been created by the pandemic and think first and foremost, how did it impact your workforce? Are your employees scared about coming back to work? If your employees interact with customers, is that a valid concern? What can you do to address those concerns? I want you to think about whether employees have been working from home. Can that continue? Would that make them more productive, happier employees? I also want you to think about how it impacted your customers. Your customers are the lifeblood of your organization. You need to be looking to them and saying, well, if they can't come into my store, or they don't feel comfortable coming into my store, how do I get my products and services to them? Am I going to need an online presence? Am I going to need curbside service? Think about and pivot your view from your customer's point of view. And then lastly, on this point, you need to address technological needs. We have an opportunity to invoke technology, whether it be online sales marketing, payment processing online, to implement technologies that will make us far more efficient and far more productive. Ask your business partners what has happened to them. Ask your vendors. Talk to your banker. Let your banker know how it impacted your business. Ask your other stakeholders. This starts a conversation, and from conversations comes ideas, and the ideas that can propel you into a new line of business or to pivot your business in a different direction if needed. I want you to be resilient. All business owners are resilient and they have an imagination unlike any other individuals on the planet. So I want you to be resilient and address your near-term cash management. I am advising all of my clients to hoard cash. I was on the phone yesterday with one of my very first clients. They have tripled the amount of cash that they're holding on hand. It is imperative that you have cash because COVID is not going away. Today in the news, I hear about the second spike. Well, there's going to be a second spike and a third spike and a fourth spike. There's just no way to predict that. The people who have the cash are going to be the people who win. So, when I say broader resilience, COVID is been devastating. Our government has reacted to that. But I will tell you this, as we are reopening businesses, some businesses are not reopening. You need to be looking at what is going on within your industry. I recently helped someone in dog boarding, and their business was completely shut down. Well, now they've reopened their doors, and now they have excess demand. They have an opportunity to actually grow their business. Well, that is going to present opportunities. We're going to pivot that business. That business is going to thrive, but we have to be prepared for the next shutdown. When I say domino effects, there are going to be domino effects from the closure from COVID. We can't see all of those right now. I can't tell you what's going to happen in June, July, and August. I can tell you that as time goes on, we are going to need to be thinking. I call it a domino effect. You could call it playing chess. You need to be looking 3 moves down the board at what your objectives are and how you're going to achieve them. So, return and create a detailed plan. What am I talking about? Well, maybe you created a business plan when you started your business. Maybe you need to go back and look at that business plan and determine how quickly you can come back to scale. COVID-19 situations are going to constantly be evolving. Civil disruptions are going to be evolving. It's the people who can look 3 moves down the board and already have determined how they can scale their business, how they can pivot their business, that are going to not only survive, but thrive. As time goes on, things are going to become clear. We're hearing about vaccines, we're hearing about treatments. There's a lot of ingenuity, American ingenuity, being put in place. So when I say that there are going to be other instances of COVID, hopefully American ingenuity is going to stop it from being so disastrous. But over time, we're going to figure out, come June, come July, come August, we're going to know what it becomes to look like in the age of COVID. So everyone who started their business used their imagination. I want you to reimagine what the new normal looks like. So when I talk about a discontinuous shift, governors are opening up businesses, 50% capacity, 75% capacity. When these spikes occur, we need to be prepared that it looks like a heartbeat. Business is going to start, it's going to grow, and then it's going to pull back. It's going to start up again, and it's going to pull back again. You've got to be able to look at that and look at the trend within your business and in your industry to figure out where those opportunities lie. There are going to be implication and institutional and regulatory implications of businesses. I don't know about you, but I have not been running back into my local barber shop to get my hair cut. That business model, I believe, is going to have to change. You're not going to have 7 people sitting 3 feet apart from each other and a waiting room full of people. How is that business going to be impacted long term? So let's be clear. There are going to be regulatory impacts. Barbershops are going to have to either have more spacing, more partitions, fewer chairs, or maybe barbers start going to people's houses and cutting hair. Those regulatory changes are going to happen. Competitive environments are going to shift. We know that people are going to not be as willing to go back into large public areas. Restaurant owners are having to shift. Grubhub sold today for $7.3 billion. That was from an industrial shift. You need to be looking around your industry and seeing what that looks like. Now, this is one of our favorite little graphs within B2B CFOs. Every person on this call that is a small business owner is a finder. You found a service, you found a product that someone was willing to pay you for. So here's what happens. You go and you open your business and you start hiring employees and you have to mind the store. The store is open from 9 to 5, 6 days a week, 7 days a week. You start hiring employees, you start landing customers, and then you have to grind out the work. Well, this starts to kill that imagination, that ingenuity of business owners. Well, what we love to do at B2B CFO is to return you to being a finder. We want you to use your imagination. We want you to take the blinders off and look at the possible pivots within your business. Now, there's a huge difference between being a finder and being a grinder. Finders know your numbers. You know what your sales numbers are. You know what your P&L looks like. You know what your balance sheet means. Finders think strategically. They're not looking at all of the things hitting them in the face today. They're looking down the road the next 3, 5. Where's the exit? Grinders tend to work in the business and they live in a blender. Something in a blender moves at 120 miles an hour. If you're spending the majority of your day working on problems or whatever's hitting you in the face, you're a grinder. Grinders also work in the business instead of working on the business. By working on the business, I'm talking about being that strategic thinker, being that one who is pushing to evolve your business to the next level. So with that, I'm going to turn it over to Michael Edwards, for President of Precision Bookkeeping, for his portion on Know Your Numbers. Michael and I have multiple clients together. I will tell you that as a CFO and working with business owners, one of the main problems I see is that financials are not properly stated and they're not done timely. Like I said, Michael and I have multiple clients together. He has a very educated and well-developed team. Their numbers are accurate, and equally as important, they are timely. So with that, Michael, take it away.
Wayne, thank you for the kind introductions and the information that you shared with us. Good morning, everyone, and thank you for attending today. Knowing your numbers is not only our company slogan, but it's our credo that guides our business and the way we approach working with our clients. As a business owner, it's important to have a grasp on the financial pulse of your business and to know your numbers. Knowing and measuring where you stand against your budget. Knowing and being able to project with some accuracy your revenue stream. Knowing your accounts receivable, how much your customers owe you. Knowing your accounts payable, how much you owe your vendors. Knowing your expenses, knowing your cash flows, ultimately knowing your numbers. Cash is king. Get every drop of cash you can get and hold on to it. That saying came from Jack Welch, who was initially criticized for cost cutting and layoffs, which earned him the moniker Neutron Jack. But as GE's revenues expanded and its share price soared in the ensuing years, he was glorified. As the CEO of GE, he took the company from $12 billion in 1981 to $410 billion in 2001 when he retired. While he was known for his management style, I'm guessing he knew his numbers. So what is cash flow management? It's the financial management and analysis of your company's cash flows. You can estimate cash on hand, project trends in cash, and evaluate surplus or shortfalls with your cash. So let's look at ways you can improve your cash flow through the analysis of your financials. And let's start with the accounts receivables, perhaps low-hanging fruit. Know your terms by customer. You ask yourself, can I shorten my terms? And collect what can be collected. If you don't have a collection process, establish one. There are apps out there that can help you. Customers can't pay? Create a payment schedule. Find out what they can pay and when, but make sure to hold them to it. Listen, if they can't pay, ask yourself, are they really a customer? And if it comes to it, as a last resort, you may need to take them to collections. So now let's look at what you owe in the accounts payable. Remember, our goal, as Wayne has said, to hoard cash, but to build cash. So don't prepay invoices. Pay monthly whenever possible. Insurance, dues, or subscriptions are some of the examples of expenses commonly prepaid. Also, defer payments whenever possible, especially with large vendor amounts. COGS, cost of goods sold, or cost of services for the professional industry. Look at ways to drop your prices on products or services, perhaps by purchasing different materials and or negotiating better pricing. Negotiate better terms. Extend your terms out as far as you can, 30 to 60, 60 to 90, and so on. Negotiate better discounts. Typically, that's based on volume purchases, so be careful that the benefit outweighs the cash outlay. Review processes. Please don't let "we have always done it this way" get in the way of process improvements. And utilize the latest technology where it makes sense. When it comes to labor, you have to take an honest approach to reviewing your labor. You need to review what your team is doing at a task level in some cases. Based on your findings, you may have to reduce hours or even more drastic, eliminate positions. You must do whatever it takes to keep your doors open. And if it comes down to it, you may need to conduct a furlough or layoff. Set a goal to cut expenses, whether it's 10% or 15%. Start somewhere that is meaningful. Review your expenses line by line. Immediately cut the non-essentials that have built up over time. And always start with the larger expenses. This process of financial analysis is important, especially during the tough times that we are currently experiencing. But you shouldn't wait for tough times. You should incorporate a financial analysis on an ongoing basis to ensure optimal cash flows. Wayne kind of alluded to this a little bit earlier in his 6 R's, but we need to get creative now. So I'd like to leave you with a final thought. Always borrow money from a pessimist. They won't expect it back. Hey, thanks for giving me your time and your attention today. I hope I was able to give you some ideas to help you increase your cash flows. So as I recommended doing a line-by-line review of your expenses, our next speaker will go into further detail on this. But first, let me tell you about the work that he does. Lance Spracklin is a business optimization specialist for the owner of Schooley Mitchell of Central Texas. They are part of the largest network of independent cost reduction consultants in North America. And when I say independent, that means they work with all vendors. They're not brokers trying to make commissions off of what business services you're already paying for. Schoolie Mitchell represents over 22,000 businesses for their cost reduction needs and get paid out of money they save from for these businesses. And they average 29% saving for each of their clients, and a significant amount of money in some cases. So with that, I'd like to turn it over to Lance.
All right. Thank you, Michael, for the great introduction and the great advice. So Michael just finished telling you about doing a line-by-line review of your expenses. On top of what Michael is recommending to review your credit card and bank statements, I'm going to recommend that you also do a line-by-line review of your vendors' invoices. In fact, I recommend that you do this each and every month and compare to previous months. Now, I know many times these bills are extremely difficult to read. It does take some practice and getting used to identifying what information is important on these bills, but you need to be patient with yourself. It will take some time to get good at reading these bills. I've been doing this for almost 19 years, and I still have difficulty at times. Although now I have advanced software analysis systems to help me through the Schoolie Mitchell tools, it doesn't help that many vendors change their billing format twice per year. It may seem like they are purposely making it difficult for you to read their statements, but don't get frustrated with it. And again, be patient with yourself. When you feel like you have a good handle on disseminating this information, look back on previous bills. Figure out what line items have changed over time. If you don't know what something is, call your vendor and find out. Fortunately for me, I have a direct line to dedicated account managers and don't have to spend much time sitting on hold with my clients' vendors. If you have an opportunity to get a dedicated account manager, don't be afraid to ask them for their direct line. And once you get good at this, document your process and train one of your employees on how to do this for you, because you probably don't want to be spending your precious time on something like this. So while you're looking back on previous bills, start paying attention to what things cost and use a spreadsheet or other database to track that pricing. Don't forget to track all of the additional fees and surcharges as well. On something like a phone and internet bill, those additional fees and surcharges typically make up around 30% of that cost. Now, once you have a spreadsheet or database set up, start paying attention to that market. Using that same telecom example from earlier, in the Austin area, there's a big push for fiber internet and 5G. And these market alternatives are going to be forcing the telecom vendors to offer more competitive pricing. And if this new technology is a good solution for your business, then keep an eye out for any upcoming promotions and sales. Most business services pricing can be found online through review sites, but it's always best to call them. And of course, be aware of the fine print. Don't accept any verbal offers over the phone. Ask them to email you the terms and conditions, and then call them back later or order those services online. The majority of the client complaints that I get about their telecom vendors is that they were lied to on the phone when buying those services. So do yourself a favor and get it in writing first. Now, the best way to know what others are paying is to simply ask your neighbors and fellow business owners. And of course, if you're worried that you're overpaying for these services, then let the experts like myself at Schoolie Mitchell tackle this for you. Now, while you're trying to understand what you're paying for, you also need to be paying attention to who you're paying. And here's why. Let's take the telecom example I used previously. Many telecom providers offer both phone and internet services, various bundled packages. There may be times when there are additional discounts with combining these services, but you also need to be thinking of your time. If you're managing multiple locations and you have the same service provider for these locations, it's going to save you time because those bills are consolidated. You need to be mindful that managing these services not only takes up your time, but also managing multiple vendors. Your time can be saved by reducing that number of vendors. And of course, there's a trade-off. If there is immensely higher cost to do so, then you would be better off using multiple providers. Now, if you're managing multiple locations, it is going to take some upfront work to determine which vendors offer which services at these locations. And you'll have to go through a process of elimination to consolidate, or like in our case above, start building a spreadsheet or database to track these vendors. I should point out that Schooley Mitchell keeps tracks of which vendors are available at which locations and what they charge for their services. We know how much work this is, and we know it's not easy to do it when you don't have available to you the advanced software analysis systems that we have to help us with it. Now, there's many businesses that are currently having difficulty paying their bills. It's important that you notify your vendors before these bills become overdue. I see countless statements on a daily basis with overdue penalties on them. And knowing which vendors they come from and how easy it's been for me to work with these vendors, it doesn't make sense to me that those charges are there. Many times vendors are willing to waive overdue penalties just by asking, but you have to ask before that bill is due. If you present a plan to them showing how much and when you can pay them, they're going to be more willing to work with you. The worst plan you can make is to just pay for those late fees. You're only throwing money away by doing so and could be damaging your credit rating. This bad practice is only going to make it harder for your business down the road. That's all I have time for now. So I'll cover a vendor management section of my presentation in a future webinar. So right now, let's go ahead and move on to the Q&A section.
Thank you, Lance. It looks like we have a few comments and questions that came up throughout the event and Wayne, Michael, and Lance's presentations. Lance is getting logged in right now. Lance, what's the first question you see for the panel?
So I've got one from John Spencer. I think this is probably best suited for maybe for Wayne. His question is, if there are waves and pulses in the business going up and down, how do you plan for staffing? Do you use the cash to maintain these assets? Do you lay them off and rehire?
Well, that's an excellent question. My first question back to the business owner would be, did you receive PPP funds? Did you have a loan or a loan that you're expecting to be turned into a grant? So even those calculations have been redone over the last couple of weeks. Again, if PPP is an issue, I've got a business owner right now that is overstaffed, but they are overstaffed because it's being covered and will be completely forgiven by the PPP grant that we all received. They're going to have to make some difficult decisions come July, August, September, if the economy hasn't roared back and demand is still down. They will have to make some reductions and have to have a plan in place to be back up to their normal FTEs by the end of the year. So again, number one thing, your business has to survive. So if there's going to be stops and starts, you're going to have to be aware that there is a possibility you might have to furlough someone if there's another significant downturn.
All right, thanks for that, Wayne. We have another question from John. If I were to stop or reduce sales and marketing every time revenue drops, we won't be able to make and build a sustainable pipeline. I'm concerned too many businesses cut profit center, which is sales, to hold on to the cost center personnel. Do you have any thoughts on that, Wayne?
So marketing is the lifeblood of the organization. So I very seldom advocate cutting marketing or sales positions. Again, same client had been calling on corporate customers. Well, corporate customers are no longer, they were selling services to employees. Well, 50% of the employees aren't there, and corporate customers aren't allowing people back into the business. So you've got to either reallocate that salesperson to go and call on different businesses and find different opportunities, or that employee is going to have to be let go. But I do not, as a routine, I do not advocate businesses cutting sales or cutting marketing. Like I said, that's the lifeblood of the organization.
All right, thanks, Wayne. We've got one more question. If there's anyone else out there with questions, please submit them now. Otherwise, this will be our last. This is from Lily Smith. As a best practice, do you audit all of your bills at the end of the month, or once as they come in during the month? I'll go ahead and field this one. Part of my recommendation was that you build a spreadsheet, and that's going to include the due dates for all of your bills and possibly even when you expect to have them delivered to you, either through snail mail or email. So you want to find out a good time of when you're going to have all of those bills, and just put a recurring meeting on your calendar to spend time on that and do them all at once, because you're going to create a repeatable process that is going to work with every single one of those bills. One thing else you need to track is sorry, I forgot what I was going to say there. All right, well, hopefully that answered your question. So we've got another question from Harlow asking about tax questions. 2019 Schedule C shows negative gross income. It's a normal startup situation. He was told he's not eligible for a PPP loan because of that negative number. He wants to find out if that's true, and if there's any good alternatives to take advantage of the market with funds from the government for small businesses. This might be another one best suited for Wayne, or maybe even Michael. I'll let y'all pick.
Harlow, reach out to me and let me review your Schedule C and see what they're seeing on there. There are some stipulations on having to have actual income, but if you reach out to me, you've got my contact info. We can review that, and I can get you some resources.
All right, well, thanks, Wayne. I don't see any more questions, so I'm going to hand it back over to Adam.
Thank you, Lance. I just want to recognize our panelists again. Wayne Hegwood of B2B CFO, Michael Edwards of Precision Bookkeeping, and Lance Spracklin of Schooley Mitchell. Thank you to everyone for attending. We'll be sending out a brief survey to get feedback from today's event. When we send out that survey, we'll also include the slides from today's presentation, as well as instructions to access a recorded copy of this event. If you know of any other business owners like yourself that need our help, or if you need our help, feel free to refer them or yourself to us. You can find out more about BIP by going to businessadvisoryprofessionals.com. I think that's about 40 letters, or by approaching the BIP partner that invited you today. We look forward to seeing you at one of our future events in person or digitally. Thanks a lot. Have a great afternoon.